Today is Saturday, March 1st, 2025, and Friday may seem like it was a good day, but actually this past week and last month in general, it's been pretty volatile, especially for my account. Because back in February 14th, I almost hit a milestone of 170K, and then I fell all the way down to 139. So I was up almost 30 grand for the month of February, but then completely lost all of it, basically slightly down, break even ish. And this is on a month where the NASDAQ was actually down 1%. And of course, year to date, the NASDAQ is down slightly more than 1%. However, for me, I am still up 14%. So still outperforming, even though I did drop almost 30 grand or basically 30 grand, still outperforming the NASDAQ. And if we take a look at some of my transactions, I did buy a bit more Honest and some more REPX in the month of February. And I did also have a cash secured put on Robinhood. On that one day, it was down a lot. And then the very next day, I closed it because it was up a lot. So did make basically $70 on Robinhood, which did help out. And I believe for the month of February, I actually did make $500 in option premium. So I am very happy about that. And I did also sell a cash secured put on Nike going into this month for March. And correct me if I'm wrong, but I think the 21st is the very next day after earnings. So that's probably why the option premiums are so high. But I still think Nike is a pretty decent deal at $76, especially after collecting $200 in option premium. So we'll see how things shake out. So currently the three option positions that I have open are, of course, my Nike cash secured put, my REPX cash secured put, and my two Honest cash secured puts that I was planning on closing after earnings because I thought that there was a chance that it could go up, but it did end up filling the gap that was all the way down at $5 on the earnings reaction. So it is what it is. I sold it at the $5 strike because I knew that there was a possibility that it could go all the way down to $5 on the earnings reaction. So I was contemplating on selling the $7 or $7.50 strike cash secured puts on Honest. But after seeing that gap around the $5 level, I thought that would have been a much safer bet. So even after the huge drop in Honest stock after their earnings, I am still up on my Honest cash secured puts, which is the great thing about selling options. Now, this recent drop in the market, I think, has definitely opened up a lot of opportunities for people that have been on the sidelines in cash. So I thought I would go ahead and just give some of my price targets because I don't think I've done that in a while, especially when the market was going up so much. I still think long-term Robinhood can hit $85 a share, but in the short term, if it does end up going down to $30, which is around their 200-day moving average, then I will for sure consider selling some more cash secured puts on it. And of course, when it comes to Nike, my price target on it is still around $90 to $100, which is why I decided to go ahead and sell that cash secured put on it. Palantir, I'm going to avoid for now, but I do think in a previous video I mentioned that it could go down to 85 to fill that gap, and it pretty much has. So at this moment, it could start going back up, or it could just chop around, maybe go down slightly even more from here. I don't know, which is why I'm just going to stay away from it. But Pepsi, my price target on that is still $175. Honest, my price target on it is still $10. So while it hovers around $5, I will definitely be looking to add more Honest. And while we're on Honest, I wanted to mention this trend that could play out going into 2026. And it's a trend that has already played out somewhat, but it could definitely help support Honest stock going into next year, which is this whole MAHA trend. Again, this isn't a political channel, but I just wanted to mention it because it is related to Honest. But for anybody that doesn't know, RFK Jr., he's working with the Trump administration to make America healthy again or whatever. And so there's been some talk on X about stocks like MDLZ because there's rumors that they're going to ban some kind of red food coloring, and it's going to be replaced with natural beet red. So some people were saying that that's like a bullish argument for MDLZ. And also a couple days ago, I believe it was Steak and Shake that announced that they're going to be switching back to beef tallow for their French fries, which is the old school way of making French fries, and supposedly it's healthier and whatnot. So there is definitely this trend of people paying more attention to ingredients, the government coming down, and businesses in general just shifting more towards healthier options or paying more attention to ingredients and whatnot. And Honest has always been the company that has had the image of being very clean, paying attention to ingredients and paying attention to every detail in their product. A very detail-oriented company. So I think Honest is very well positioned because not only are they well positioned financially, but they're not a company that is trying to react to a current trend and trying to keep up with the times. They were already on that road path. Basically, they were one of the trendsetters. So definitely, I do think Honest can still hit $10. I just don't know when. Now, when it comes to Tesla, I do think it's a bit oversold at the moment. So it could go back up to 300 something, 350. Like I said, it's similar to Palantir and TLT where it's just so unpredictable. I just can't really set a good price target on it. But if I had to guess, in a bullish market, Tesla could easily hit 350 and eventually 400. So, however, that 350, 400 price target on Tesla is in a very bullish environment. So if this current correction ends up continuing, Tesla is obviously going to still be hit hard because it's one of the mega cap techs. And SoFi, of course, I still think $20 or $25 per share is a decent price target on it. And I might consider selling some more puts on it. I'm not sure. I'm kind of in the middle between SoFi and Nubank, which one I want to sell some more puts on. But for sure, I am keeping an eye on it. PayPal, I still think $90 to $100 a share is a good price target. And I actually might consider selling some puts on PayPal as well. When I think could easily hit 100, REPX I think could hit $50 to $60. Nubank actually is pretty interesting because it's been hovering around the $10 range for a really long time. So the gap that I was talking about when it comes to Nubank is this $12 to $13 zone. And right now we're almost at $11. So that doesn't look like a bad buy, especially if you think it could hit 13 to fill up that gap and go up to that moving average. So I might consider selling some puts on Nubank, but the premiums are just so low. And in order to collect any decent amount, I'm going to have to sell a bunch of contracts. So I'm going to be keeping an eye on it. And speaking of gaps, Google actually has one in the $190 to $200 range. I know I've said this about a ton of other stocks like PayPal, Nubank, SoFi, and whatnot, but I really do think selling some puts on Google might be a good bet right now. Now, I know lately the market has been really crazy and a lot of us have been losing a lot of money, especially myself. But I promise you guys, the longer you stay in the market, the more experience you get, the more that these types of moments just kind of don't really matter anymore. For instance, 30K is definitely a lot of money to me, but I've been through so many different drawdowns that it almost doesn't really matter anymore. And a part of that is experience, but it's also risk management, because if you're a 20-year veteran in the market, but you've margined out your entire account, then you're still going to be afraid, of course, even though you've been in the market for 20 years. So part of it is experience, but it's also risk management. And as long as you guys just avoid buying into the FOMO, like when Palantir was 120, 130, whatever it was, dollars, and you guys were buying into the hype, or when Robinhood was almost $70 or whatever, or $60, I think it was. I noticed a lot of people on YouTube and X were talking about how they regret not selling at the top and they regret buying Robinhood at 50 something dollars, whatever. But if you guys can just stay in the market, get more experience, learn to avoid FOMO and learn to buy in whenever everybody else is panicking, and you keep on managing your risk, I promise you guys you will become better investors over time. And I'm not trying to be offensive to y'all, but this recent drawdown is honestly not really a big deal. Even though I am down 30 grand in 1 month, this is kind of like a baby drop. So if you guys can't really handle this, then you for sure need to reconsider what your goals are or how much exactly you want to risk. Because I promise you guys, the market can always go down more. But with that being said, good luck to y'all. Make sure you guys are staying smart, not buying into the FOMO, definitely not taking the advice of people you see on the internet, YouTubers, TikTokers, X, and whatnot. But yeah, guys, basically just stay calm and stay normal.